All right, good afternoon, everybody. Thanks for attending. I'm George Salamis, President and CEO of Integra Resources, and I'm going to try and make this presentation as engaging as possible, but as quick as possible. I've given a bunch of these, obviously, over the course of the last few days, and I'd like to leave some time for Q&A at the end. So, a forward-looking statement. Integra Resources, it's a story that many of you are familiar with. Maybe it behooves me to go back in time a bit, just take you through a bit of the genesis of Integra Resources and where we came from, what our brand is. So obviously, or maybe some of you would know, Integra Gold is where we started in 2011, an exploration company with a wing in prayer in northern Quebec, having acquired a past-producing mining operation out of bankruptcy. In fact, it was a well-performing mining operation where I started my career. We were very successful in making a big discovery, and the rest is history. We sold that asset to Eldorado Gold, and it's now their top-performing asset in their portfolio. And so we decided to do two things, I think, fairly well. After that, we kept the band together moving forward, the same team, largely speaking. And the second thing that we did, which I think was a great strategy into the end of the day, was to focus on past producing assets that were shut down at low gold and silver price environments. That really has been the key aspect to what we like and what we feel drives a lot of shareholder value for our shareholders. You know, we like the aspect of going into assets that have had work done on them, with infrastructure, maybe proven resources and reserves, and just making them better. Essentially, that's been the mantra of Integra Resources since the very beginning. You will also have noted in the last 9 months that we made a pretty sound decision to pivot into gold production. We acquired a producing asset, moving ourselves into a producer category with a means of funding our other projects from a growth perspective, which means that at conferences such as this one, we don't have to walk around cap in hand wondering where our next 10, 20, $30 million is going to come from. We have a means of self-funding ourselves into further production and growth. And a bit more of that in a second. So what are we as a company right now? So we've got Florida Canyon, which generates cash flow to support DeLamar and Nevada North. Florida Canyon is an asset that we acquired recently for net of the cash that came with it, $35 million. So a very low cost acquisition for us that gets us into the production category. 70 to 75,000 ounces per annum is what we're guiding on right now. In addition, we put together this great pipeline of projects, all situated within the same geographic jurisdiction of this great part of the Great Basin, all within 3 hours drive of one another. So a nice, neat package of 10 million ounces amongst these three assets. And I think you will understand that, you know, we sit at a time right now where there's great scarcity in this great jurisdiction with assets that are as advanced as these. Bit more in a second in terms of the team. But we've got a great roster of shareholders as well, which we'll talk about a bit later on. And last but not least, this attractive valuation. From our perspective, there has been a bit of a re-rate afoot into the producer category, but there is lots more to go there. So in the course of putting together this great roster of development projects and moving into production, we had to put together a team that was fit for purpose. And that fit for purpose meant we had to bring on the skill sets that we needed to not only drive production and maintain production, but also build new assets and also get new assets permitted. So top of the list, Cliff Lafleur, recent addition to the team. Cliff's been great in terms of not only managing everything that needs to be managed at Florida Canyon, from maintaining and perhaps growing production there, but also looking at our development level projects and driving them forward. And that's what Cliff likes to do. Cliff has a great pedigree and a track record coming from Silvercrest and the great takeover by Core Mining that you saw there. And so that's what Cliff's doing. He's at the conference now, and he's doing the meetings with us. He's a great addition to the team. Second, great acquisition that we made as we are in permitting at DeLamar. In fact, we're one of the most advanced projects in permitting right now, gold projects in the US. We needed some bench strength when it came to permitting. And I can think of no better person to add to the team than Dale Kerner. Dale was the person who led the team that acquired or basically drove Perpetua to their record of decision and permit at the Stibnite project in Idaho. So Dale is the one who's been dealing with the federal and state level regulators for the better part of the last 6 years. Once that was delivered successfully for Stibnite, Dale came and worked for us, and Dale's been a great addition to the team. In addition to that, the usual cast of characters that you can see on the screen, some familiar faces there as well. So jumping quickly into these three assets, Florida Canyon, as I mentioned at the beginning of the presentation, it is what was provided us with a pivot point into cash flow and production. We acquired this in late 2024, took the keys really towards the end of late 2024, and we've been in production now for just over 2 quarters, but so far so good. Our guidance that we put out in 2025 was talking to 70 to 75,000 ounces for this year. A 6-year life of mine, which we think we can make much longer than that, and I think our exploration is demonstrating that, and really some great tweaks and optimizations that can be had there. So more on that in a bit. And then the big prize, if you will, something that we've been working on for a very long period of time, the Delamar project in southwestern Idaho, only 3 hours drive from Florida Canyon. This is a project that was the focus of a pre-feasibility study in 2022. We're in the process of wrapping up a feasibility study right now, something that we're aiming to put out towards the end of this year. But understand that this is a project that has had a lot of money spent on it to de-risk it. A lot of money spent on it through a very dark period in the financing cycle, as you are all well aware. This is a project that has the ability to produce between 120 and 140,000 ounces per annum. The last life of mine that we put out in the study was 8 years. We think we can push that closer to 10 years. And you'll see a few changes from PFS to FS from a technical perspective, which we believe make the project better and more robust. But I think the other important aspect with respect to Delamar to talk about here is permitting. We've done 5 years of baseline study work. We've done 3 mine plans of operation, the last of which was approved by the BLM only weeks ago, really ushering our transition into permitting, NEPA permitting right now. And I think you'll all agree that we have probably the most permissive political environment in the US in a long, long time to be permitting mines in. And then last but not least, Nevada North, only 26 miles to the west of Florida Canyon, so we've got this great base of talent at Florida Canyon, which we can at some stage deploy to Nevada North. If you would have asked me 6 months ago if we had a lot of money to tackle and advance and de-risk Nevada North, I would have said not much in the treasury to do that, but now through the magic of higher gold prices, this great abundant cash flow, a treasury of $63 million US, we now have the ability to advance that project to something that looks like a PFS study sometime, perhaps late next year. So this is it. The aiming mark for all of us in the company, and we're all firmly focused on this, is essentially this. Within a period of time, perhaps over the next 3 to 5 years, something that looks like Florida Canyon becoming Delamar, and then Delamar becoming Nevada North. And on a cumulative basis, that gets us close to 300,000 ounces. And as you all know, that's a prized category from a production perspective that gets us firmly and squarely in the sights of mid-tier status. And all of that's organically owned and developed and pushed amongst our group right now. So jumping quickly to Florida Canyon, as I mentioned, we put out our guidance earlier this year, 70 to 75,000 ounces, and we are on track to do that. Total cash costs of $1,800 to $1,900 per ounce. Mine all-in sustaining costs of $2,450 to $2,550 per ounce. And so you'll ask the question, yeah, how is it so high? What's the difference between total cash and all-in sustaining costs in the context of the guidance that we put out for this year? I can tell you that we are investing about $55 million into this asset this year, basically catching up on under expenditure on this asset and under previous ownership over the past 10 years. So we're spending this money on catching up on pre-stripping. We're spending this money on building new pad space that wasn't done in years previous. And we're spending money on exploration to make it bigger. I can tell you that there's a lot to be done at this asset. We really had no idea what we had actually acquired for $35 million just over a year ago in terms of what can be optimized and what the actual exploration upside was. In the case of Florida Canyon, there hasn't been a meter, a foot of real exploration growth-oriented drilling done out there for a very long, long time. And so right now we've got 15,000 meters of drilling that we're in the process of completing. And I can tell you that we have a very high conviction that we're going to be adding mine life to this asset, taking it from 6 years to greater than that, let's just say. And everything that we're doing right now from a study perspective at Florida Canyon is focused on driving a brand new feasibility study to be put out in the first half, towards the end of the first half of next year. And that will include a brand new mine plan with a new reserve plan with what we feel is going to be a meaningfully increased life of mine plan to it. So I think you'll all agree that this was an excellent acquisition for us in the end of the day. But I can tell you there's also a secondary aim here, which is to bring these costs down. Obviously, $24.50, $25.50 long term. It's not something that we were necessarily happy about, but that, I should say, comes as a factor of the reinvestment back into this asset this year. So another way to look at it, if you were to take the capital growth and sustaining that we're putting into this operation this year, cut that in half, then that $24.50 number goes down much closer to $2,000 an ounce. We're also looking at ways at growing production. There's a couple ways to do it at Florida Canyon. Maybe increasing run-of-mine leaching, maybe increasing crushing capacity. As you know, with a mine like this, a small mine has, relatively speaking, a fixed cost. Best way to lower costs is to produce more ounces, spread that cost over more ounces. So we're looking at that, and you'll see that as the focus of the feasibility study next year. Now, something I'm pretty passionate about, again, getting back to the exploration potential at Florida Canyon. When we looked at it, again, we looked at the data set. We looked at the fact that this is one large low sulfidation epithermal system. It will be sometime next year producing its 3 millionth ounce of gold since it's been in production for the last 25 years. And in the category in the world of geologists that I've lived in for years, 3 million ounces under one low sulfidation epithermal cell, that's pretty big. And what that does is it speaks to the potential for more there. So there are certain areas that we've been looking at the mine site. We've been looking at areas where there's low-grade stockpiles of ore that were left behind by previous operators. Not economic at lower gold prices, rather, but certainly economic, potentially economic now. And there's a lot of that material on site. We're drilling it, and we're obtaining great grades and great thicknesses of potentially economic material subject to future studies to come. In addition to that, this tremendous acquisition, low-cost acquisition, came with a very large land package. Something close to 7 miles of strike south of Florida Canyon is what our land package stretches over this Humboldt range. And it's an area that I can tell you from personal experience has been vastly underexplored. Previous operators out there identified targets, that are sort of glaring at us in the face, but never got around to drilling them. So that's something that we'll be doing in the next 12 months as well. Expect more growth there. Quick commentary on our share structure, 169 million shares outstanding. As I mentioned earlier, about $63 million US in the treasury. That's certainly the healthiest treasury we've ever had. Also driven by cash flows right now at record high gold prices. Well covered on the street, as you can see there. A lot of big name research analysts cover us. In terms of ownership breakdown, as you can see there, yeah, very, very typical of what you'd see for a company of our size. Currently about $600 million of market capitalization with a really good balance between retail and institutional shareholders. And then last but not least, some very key strategic investors in the form of Alamos Gold, Wheaton Precious Metals, the world's largest royalty and streaming co, and BD Capital, a company I'm sure you're all very familiar with. just moving to the benchmarking aspect of who we are, and just understand that we have just made the leap from production into growth and development into production. But as you can see from a benchmarking perspective, certainly upper right-hand corner is one of my favorite graphs. It shows us relative to some peers of ours on a total contained ounces basis, 10 million ounces in the Great Basin. Not many of those around, I can tell you that much. So we compare very favorably, but also compare favorably when you look at the 1 + 1 = 3 exercise of Florida Canyon driving value to develop DeLamar, and then DeLamar driving value to develop Wildcat and Mountain View in Nevada, getting us to that 300,000 ounce mark of production organically. So many of you have seen our share price graph over time. It looks pretty good over the last couple of months. Obviously, we're not simply satisfied with that. There's lots more value to be had here. On a PNAV basis, we're currently trading about 0.35, with our peers kind of averaging 0.5 to 0.7 range. So we're kind of trading in that spot of an advanced developer, junior producer. And we believe consistent demonstration of quarter-over-quarter production out of Florida Canyon, consistently demonstrating that we can self-fund our way to DeLamar development. Consistently developing these assets in a methodical manner and de-risking them. Getting permits at DeLamar, which we believe is about 2 years away for us. All of these measures will lead to further de-risking. We still have a ways to go. So just to recap, Florida Canyon, it's the cash engine that's paying the bills everywhere right now. We're very happy with its performance, and we will continue to show that consistent performance and growth in the next year in the form of studies. So we've got this great growth pipeline, 10 million ounces in the Great Basin, again, something that's pretty scarce. And from a team perspective, we've made some great additions. We've got the team now that's going to deliver not only permits, but actual mine development and production for Integra and its shareholders. So on that note, I note we've got 2 minutes to go. Happy to take some questions.
Any questions from the floor?
Thanks very much, George, for that update. In particular, I appreciate you giving us a view on the permitting cycle at DeLamar. Mm-hmm. Just given you're heading towards that feasibility study, wondering if you could comment on what the stakeholder relationship has been like, how that's evolved over the last few years as you work towards that more final study. Local landowners, you know, what does that relationship look like? Yeah,
so and that's something we've spent a lot of time on, and that was a lesson learned from Integra Gold. If you're going to engage with stakeholders, engage early. Don't show up late. And so that's something straight out of the gate that we did when we acquired DeLamar from Kinross, you know, basically seven and a half years ago, which was engage with the ranching community. The ranchers around Jordan Valley and DeLamar, they've been there for 100 years plus. It's an important stakeholder group. We employ a lot of the local ranching community. For them, their biggest concern is, one, don't destroy the land, don't mess up their water, and provide employment opportunities for their kids so their kids stay on the ranches. And that's one message that we've been getting to them, and we're in lockstep with them. The community of Jordan Valley, that's another stakeholder group. Obviously, they're all pretty much ex-Kinross employees who, or the sons of, or the daughters of Kinross employees, so they know the benefits of mining, and so they're on side. And last but not least, some of you in the audience might have noted we put together this great, what I would call like an impact benefit agreement, or what we call a relationship agreement with the Shoshone-Paiute tribe of Duck Valley. And they are a very prominent tribe both in Idaho and Nevada. And it's something we've been working on for 5 years, and it's an agreement and a relationship that we'll continue to build over time, but it'll see a number of benefits flow to the tribes. In exchange for that, we get their phenomenal expertise on how to develop this in a reasonable and safe and environmentally responsible manner. They've been at the table with us since the very beginning in terms of everything we've been doing from a baseline study perspective. And so we're very happy and fortunate to have them on our side of the table. Those are the three sort of key stakeholder groups that we've been dealing with. Sure.
I think we're just out of time. Sorry for that.
I'm happy to talk to you after if you want.
Perfect. Thank you, George.
Thank you.